My name is Josh Emmett, and today I want to talk to you about blowing the whistle in accounting. I think the easiest way to discuss this topic is to find and follow the case of a prominent accounting whistleblower and see how it relates to the 7 steps outlined in the book Managing Business Ethics by Linda Trevino and Catherine Nelson. One of the most famous accounting whistleblowers is a man by the name of James Alderson. Alderson displayed a commitment to ethical behavior early on in his life and continued with that commitment in his professional career. It was this commitment that surfaced when a manager approached him and asked if he was comfortable preparing 2 separate cost reports. One was to be submitted to Medicaid in order to receive the maximum possible reimbursement, and the second was to be submitted to the auditors, who were unlikely to believe the numbers in the first report. Of course, James was uncomfortable with this proposition and turned down his manager. Shortly thereafter, he was dismissed from the company and decided that it was time to appeal to the law. He filed his first lawsuit in 1992 and was told that he had a 60-day wait to see if the federal government would join in the case. Toward the end of the 60-day window, he was contacted by the federal government, which told him that they would like to be involved in the investigation, but weren't sure if they were ready to be a full partner, and asked for an extension of the 60-day time frame. He granted the extension because at least they hadn't said no. The next thing he did was to hire Nicholas Bordeaux, who was an auditor with extensive experience in Medicaid and Medicare type transactions. With the help of Nicholas Bordeaux, he assembled a large, powerful case using the documents they'd obtained about the fraud that was going on in the healthcare industry. They researched about Qui-Tom lawsuits, which allowed them to sue on behalf of themselves and the federal government. They found a lawyer named Stephen Meager who had extensive experience in both Qui-Tom and Medicaid lawsuits. With his help, they got the FBI involved in 1996, and in 1998, the federal government decided to become a full partner in the case. The first of 2 settlements came in December of 2000. That means that it was over 8 years from the time he filed the first lawsuit until the first settlement. That is 8 years of his life he spent. He lost his job, he had to move his family to a small apartment in a different town, and they lost a lot of the comforts of life to which they'd been accustomed. If you ask him today, he'll still say it was worth it, even if he hadn't received the massive payout that came later. In the first settlement, he split a $100 million payout, and he received $20 million in the second settlement. His case fits the outline in Managing Business Ethics. Their first step is to contact your immediate supervisor. This is what Alderson did when he said he was uncomfortable with the 2 cost reports he was being asked to prepare. He received no support from the manager, who later fired him, so he went to the next step, which is to consult with your family. Alderson's family played an important and supportive role throughout the entire whistleblowing process. The third step is to take it to the next level. By this time, James had already been dismissed by the company, but he still took it to the next level by hiring Nicholas Bordeaux to help him build a very strong case. The fourth step is to contact your company's ethics officer. This step did not apply to Alderson because it was not until the Sarbanes-Oxley Act of 2002 that major corporations were required to have formalized procedures for whistleblowers. The fifth step is to go outside your chain of command by getting involved with the legal or audit departments, which he did by hiring Joseph Meager as a lawyer. The sixth step is to consider going outside of the company and involving a regulatory agency such as the FBI, the SEC, or the EPA. James did this by involving the FBI in 1996 and the federal government in 1998. The final step is to leave the company. This step was taken care of for him when his manager dismissed him shortly after his decision to stand up for important ethical principles. James Alderson is a good role model for any accountant, not just because he stood up for business ethics, but because of the diligence he displayed in his 8-year struggle to bring the truth to light. Any accountant should be proud to share a job title with a man so willing to sacrifice for truth.